So just to set the table a little bit, Yieldstreet is probably the best known of this wave of startups that promised the retail investor access to these esoteric assets like real estate, litigation proceeds, things like that, private equity, private credit. And what I found digging into their actual results, Frank, is that you mentioned these 30 deals. And so 23 of them have already gone to watch list, which is essentially saying they could default. 4 have actually defaulted. And what that means, Frank, is that investors have plowed $370 million into these funds, and 78 million have already defaulted. And so they're on the hook for these losses. They don't know whether or not the ones that are still in the pipeline are actually going to pay off, and they're waiting and wondering what's going to happen, Frank.
All right. So you've also heard from Yieldstreet, right? They gave you a comment about just this situation.
Yeah, we should put it up on the screen and give out their statement, which is essentially that they got affected by the higher interest rates back in 2022. They put their people into these investments, and the results kind of speak for themselves. And I think it's important to note their tagline is, Frank, invest like the 1%, which gives you this idea that perhaps they're putting you into investments which are the domain of rich folks and the big players. The professional investors I actually spoke to have actually the opinion which is the opposite, which is perhaps that Yieldstreet has access to deals which the professional investors, in this case the real estate world, like the Tishman Spires of the world, have passed over. They've picked it over. They don't want these. And so, this idea of adverse selection, that they're getting the deals that instead are the best ones and perhaps the ones that are picked over. And so you have the result, which is, their real estate performance over the last, since inception to now, which is like a 10-year period, is about 2%. Okay. And just 2 years ago, that performance was something like 9.4%. So that their performance in this asset class is plummeting. It is their largest product line, Frank.